Good morning. I'm Doug Krisner. Here are the stories we're following today. Talk of some progress on finding an agreement of sorts on border security here in the U.S. Ed Baxter has more from the Bloomberg Newsroom. Ready?
Yeah, that's right, Doug. That is what the talk is today. It would facilitate getting aid to Ukraine and Israel. Senator John Cornyn on Fox, as heard on Bloomberg, says very difficult, though, and delicate still.
Well, I talked to a couple of key negotiators yesterday, and they feel like they're making some progress, but I know Senator Schumer thinks there's going to be some deal cut behind closed doors and then jam it through the Senate and then jam the House. That's not going to happen.
Now, Cornyn says it's about long-term border policy. Senator Joe Manchin, though, also saying he's very encouraged. On CNN, though, he says the goal is just getting the border shut down at this point.
The whole world is in the flux, and they're taking advantage of a system that truly is broken. And this is not immigration reform. They're basically working diligently on just securing the border. It must be done. It must be shut down.
So this is all tied, of course, to aid for Ukraine and Israel, and Ukraine waits to see if more aid is coming. Ukrainian ambassador to the U.S., Oksana Markarova, on CBS, as heard on Bloomberg, says it's getting to be a critical point.
All the eyes are on Congress now, and we really hope that there's progress that we hear about, and they will be able to find a solution. And look, as the former Minister of Finance, I negotiated many budgets with my parliament. I understand the importance of the local priorities.
And she says she just prays for a resolution soon. Israel waits as well, and today it's pushing back on the increasing U.S. and European calls for a ceasefire. Its foreign minister calling it a prize for terrorism if that happens. And Senator Chris Van Hollen on ABC, as heard here on Bloomberg, says Israel is a difficult partner for the Biden administration at this point.
We are with them entirely in the objective of ending the military threat. But again, we need to make sure that our values are reflected in this so long as we are providing all of this equipment.
Yeah, the Biden administration has called for a two-state solution after the war, which Israel says will not happen. Israeli media, along with CNN, are reporting, by the way, that there have been progress in weekend talks between Mossad and Qatar's prime minister for prisoner exchanges. Chileans have rejected a second proposed new constitution in a referendum. Bloomberg's Carolina Gonzalez says most likely will not end the discontent.
Well, Boric's administration says there won't be a third attempt. However, a lot of analysts have said that this won't really bring a closure to this process because these situations, these issues within the people are still going to be present. And there's not going to be a change that will address whatever took these people to the streets back in 2019.
Yeah, these attempts to change the Constitution began in 2019. Now, this second referendum has failed. The White House has taken aim at Donald Trump, saying a rally, immigrants are poisoning the blood of our country. The statement says, quote, echoing the grotesque rhetoric of fascist and violent white supremacists and threatening to oppress those who disagree with the government are dangerous attacks. So what did Trump say? This is Trump.
They're poisoning the blood of our country. That's what they've done. They poison mental institutions and prisons all over the world, not just in South America, not just the 3 or 4 countries that we think about, but all over the world. They're coming into our country from Africa, from Asia, all over the world. They're pouring into our country.
Meanwhile, Trump continues to have a commanding lead in all of the polling. Global news 24 hours a day and whenever you want it with Bloomberg News Now. In San Francisco, I'm Ed Baxter. This is Bloomberg. Right, Doug?
Let's begin now with the pushback against those aggressive rate cuts that the market is expecting. Today, Chicago Fed President Austin Goolsbee was saying it's simply too early to declare victory on the Fed's fight against inflation. And he says decisions on rate cuts will be based on incoming economic data. Not really a surprise on that front. Goolsbee has been one of the more optimistic voices when it comes to the idea of a soft landing on the American economy. But he said, despite progress, the Fed is still far from that 2% inflation goal. Here is Goolsbee speaking to CBS Face the Nation.
We're still above the target. We got to get inflation down to target. Until we're convinced that we're on path to that, it's an overstatement to be counting the chickens.
That is Chicago Fed Bank President Austin Goolsbee, as heard earlier here on Bloomberg. Now on Friday, we're going to get data on the Fed's preferred measure of inflation. That is the Personal Consumption Expenditures Price Index. You know, U.S. equity indexes are at or near all-time highs. However, Wall Street's expectations for corporate profits seem to be lagging. We have more from Bloomberg's Denise Pellegrini.
Analysts project companies in the S&P 500 index will earn around $247 a share next year, according to data compiled by Bloomberg Intelligence. That's basically where the projections were May 5th, before the S&P surged 14%, meaning as shares rallied, while earnings estimates remained steady, valuations went from reasonable to somewhat rich, and the index is now trading almost 20 times projected earnings, way above its average reading over the past decade. So is the optimism over stocks too high, or are the earnings estimates too low? Data compiled by Morgan Stanley indicates sell-side analysts are making more downward revisions in profit outlooks for next year than upgrades. But the Fed's potential pivot could be about to change all that. Denise Pellegrini, Bloomberg Radio.
On Tuesday, markets will be focused on the Bank of Japan. Governor Kazuo Ueda is inching toward an end of the world's last negative interest rate regime. However, chances are it's not going to happen this time. We hear authorities aren't in a hurry to move. Here's Bloomberg's Paul Jackson.
When is it going to move? The logic suggests April. They're looking for more evidence that we've got wages feeding into inflation. Because remember, the Bank of Japan says, yeah, we've got inflation, but it's bad inflation we've got. We want good inflation that's supported by wages. So in March, mid-March, we get figures from union management negotiations for a wide swathe of companies. So those figures are going to be fairly key.
That is Bloomberg's Paul Jackson in Tokyo. Recently, some BOJ officials have commented on exit scenarios, and that has led some in the market to view perhaps the BOJ is near an imminent change. However, Bloomberg economists see the messaging as part of a long process, laying the groundwork for a smooth transition next year. We go to Hong Kong next, where the government is putting its number one national security target on trial today. Bloomberg's Rashad Salamat has more on the prosecution of Jimmy Lai.
As an outspoken journalist and entrepreneur, Jimmy Lai founded the popular and controversial tabloid Apple Daily. The former media mogul is accused of endangering national security and, if convicted, faces the rest of his life behind bars. Lai has already spent more than 1,000 days in prison for a range of lesser offences. In many ways, he is standing for acts of self-expression, which were once openly permitted in the former British colony. US, UK and Canadian politicians have raised concerns over Lai's case, with many defending him vigorously. The trial risks further inflaming tensions between China and the West. Lai's son, Sebastian, believes Hong Kong is essentially putting its freedoms on trial. In Hong Kong, I'm Rashad Salamat, Bloomberg Radio.
Those crippling tariffs imposed by Beijing on Australian wine exports could be lifted shortly. The story from Bloomberg's Paul Allen.
Australia's Trade Minister Don Farrell said China started reviewing the sanctions in late November and that the process was, quote, well and truly underway. And he's confident the wine tariffs could end early next year. This was in an interview with Sky News. China imposed anti-dumping tariffs of up to 218% on wine in March of 2021, decimating what had been one of Australia's major overseas markets. Separately, Don Farrell told Sky News he also expects taxes on lobster to be removed in the near future after raising that issue with his Chinese counterpart 5 times. I'm Paul Allen, Bloomberg Radio.
Daybreak Asia, and our guest is James Abate. He is Managing Director, also the Chief Investment Officer at Center Asset Management. He joins us from here in New York City. James, always a pleasure. I think we can agree that there has been simply an enormous amount of easing in financial conditions since the Fed meeting last week. So it's not really surprising to see a number of Fed officials pushing back on aggressive rate cuts. Where are you right now in viewing where the Fed is vis-a-vis inflation and the amount of easing we're going to get in the new year?
Yeah, it has been head spinning, right? You know, early December, the Fed's talking about rate cuts being premature. And then at the announcement of the meeting, they said rates have peaked and expect 3 cuts in 2024. And then the next day they trot out 3 Fed governors to kind of walk that back and continue that over the weekend, excuse me. So, you know, we go from having a bear steepening of the curve, right, where long-term rates were rising in the fall period, now to long-term rates are actually dropping. And, you know, it's ironic because the Fed has been talking about it for the longest period of time, that they finally get real interest rates to the 2% level after rates being negative, essentially since 2008 and the global financial crisis. So the concept of 2% real rate, 2% inflation has been the backbone of, a good, stable currency, lack of capital and discipline, all the things that essentially the Fed would seem to want to have. So to the extent that the Fed now is pivoting, I think one needs to just think about from a historical perspective. Remember, the Fed began easing in the first quarter of 2001, but the S&P didn't bottom until the fourth quarter of 2002. And, while the stock index nadir didn't happen, until the first quarter of 2009, that came 18 months after the first rate cut in the third quarter of 2007. So Fed pivots usually occur during negative events, market or credit stress. Maybe even the soft landing of 95, 96, where people are kind of hanging their hat on right now. The Fed was very gradual in terms of 3 rate cuts, and then even started to raise rates in 97. But the valuation perspective right now is very different than it was back then. And credit spreads are ridiculously tight at this point in time. So I think we're priced for perfection, with the potential that the Fed may be doing, quite a bit of, damage in terms of its own credibility with the statements that it's made this past week in terms of three cuts next year.
So you believe maybe that they're going out a little ahead of themselves? They need to wait for some more data before they can confidently say we're primed for cuts?
Yeah, I think so. I'm trying to understand the motivation as to what they're trying to accomplish in such a rapid change in terms of policy in just a matter of a couple of weeks. Is it something that we should be looking at in terms of them trying to alleviate the significant mark-to-market losses on the treasury bonds and other bonds that are held by the banking sector, which are held in the, held-to-maturity baskets of each of these companies? What are the recession risks that we're looking at in terms of what's going on? And to the extent that basically you look at net interest margins right now, the best proxy for net interest margins at the banking sector is the 5-year Treasury minus the Fed funds rate. It's minus 1.4%. That's the same level it was back in early 2008 and late 2000, right before we, had very significant difficulties in the banking sector. And so, even with the soft lending spread back in 95 and 96, that spread was about 150 basis points positive. So it's very, very difficult to understand why the Fed would make such a radical change in policy in a couple of weeks, other than the potential that it sees, some type of pressure, particularly in the regional banking sector, which they largely avoided in the springtime, as we know, with Signature Bank and Silicon Valley Bank.
So in terms of the equity market, the Dow at a record high, same is true for the NASDAQ 100. Even the Philadelphia Semiconductor Index is at a record. And I'm wondering whether or not you see the economy as being strong enough to justify that optimism and the rally that we have seen in stocks.
That's why I've been held back in terms of, remaining relatively cautious. I mean, again, there's been this split between top-down indicators, right? The ISM index has been in contraction for 12 straight months. We've never not had a recession when that happened, but we've seen, market prices, as you point out, not just stocks, but corporate bond, the investment grade and high yield spreads at ridiculously low levels and big rallies are what we've seen. But even when we're talking about earnings, I know during the news segment touching upon earnings growth rate, I mean, we're looking at the earnings growth rate for 2023 to be on pace for a 0.4% decline. What you look at in terms of bottom-up pricing, as we do, the market implied future growth rate of EPS is about 11.4% for next year. Overall EPS estimates for the S&P, I think, are 8.2%. And it's assuming that a very significant operating leverage, meaning top-line growth expected around 4 or 5% with a doubling of EPS growth through margin expansion. That's while at the same time, the biggest contributing factor to negative earnings this year has been the fact that even though we've had some alleviation on pricing pressure from cost of goods of sold getting better because inflation has ebbed and supply chain pressures have eased, SG&A expenses are rising as wage growth has caught up with trailing inflation figures.
This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street. Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcast. You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco. Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. Plus, listen coast to coast on the Bloomberg Business app, Sirius XM, the iHeartRadio app, and on Bloomberg.com. I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.